Do you want to learn one of the best strategies you can actually use to compound your money over time? If so, stay tuned for this video. Hey everyone, my name is Rafa Collazo and welcome to the Millennial Moment. In today's episode, I'd like to talk to you guys a little bit about index funds. Now you may be thinking, what are index funds and how can they really help me? Well, the actual technical definition of what an index fund is that it's an exchange-traded fund that passively follows a particular index in the market. In layman's terms, what this means is that it's really a group of stocks that follows an index in the market, for example, like the S&P 500. So what it is a group of multiple stocks within that S&P 500 that is passively following this particular index. So what you can expect is similar returns to what this particular index returns. Now, although you may be initially skeptical right now, let me share with you 3 reasons why I think that investing in index funds is a phenomenal way in order for you to compound your money over time. Now, reason number 1 is because it's actually passively managed. Now, in most mutual funds, fund managers actively trade stocks within that fund in order to try to get the best return possible for their clients. Now, one of the problems with actually actively trading these particular stocks is that they start incurring transaction fees. And these fees can be as high as $10 per trade. So you can imagine as fund managers make hundreds of transactions in a particular day, they could even be incurring thousands of dollars in transaction fees just by actively trading all these stocks. Unfortunately, it's not the fund manager who actually incurs the cost of all these transaction fees. It's actually you as the investor. So being an investor in these particular funds is not beneficial from a transaction fee standpoint. Now, the reason number 2 is because they have very low expense ratios. Now, you may be asking, what's an expense ratio? Well, an expense ratio is how much it costs you as an investor in order to be able to be in that fund or participate in that fund. In many actively managed funds, fund managers take a management fee in order to manage that particular fund. And some of these management fees can be as high as 3 or 4%. So that means that every $100 that you invest with that fund, they take $4 as part of their management fees. Now, one of the great things about index funds is they have extremely low expense ratios. For example, the total market index fund for Vanguard has a 0.16 expense ratio. That means for every $100 you invest, you only pay about 16 cents to be able to participate in that index fund. Given the fact that the stock market's been returning anywhere between 7 and 8% per year over the last 50 years, you could really be making about $7.84 for every $100 you invest in these funds over the year when you subtract out the 16-cent expense ratio. Now, that seems like a pretty awesome return to me. Now, the third reason why I think that index funds are actually a phenomenal way to go when you're talking about investing is because of their broad diversification. What that means is that in these funds, they have many stocks from different companies in order to balance out your returns and losses over an extended period of time. The reason why this is so beneficial over an extended period of time is because in the bad times, you won't lose as much money as someone who just invests all in on one particular stocks and all of a sudden the market turns. For example, if you invest $1,000 in a particular company and let's say a recession hits, you lose 50% of the value of that particular stock, you just lost $500. However, if you carry an index fund and you have $1,000 invested in 12 or 13 different companies, if some companies did well and some companies did poorly, you start to level out in your particular losses. So you may only lose $100 as opposed to the $500 you would have lost if you had just invested all your eggs in that one particular basket. So given all the benefits that can be attributed to actually investing in an index fund, how do you go about getting started? So below I actually provide 3 particular index funds that are very popular right now, and I also provide an article that will help you be able to set up an account so that you can buy your first index fund today. Now, I promise you that if you utilize the information in this video and the article that I'll provide below, I promise you that over an extended period of time, you'll make a significant amount of money and compound your money over time. If you love the content of these videos, be sure to subscribe below. I regularly provide awesome and engaging content for millennials every Monday, Wednesday, and Friday. But not only that, for a limited time, you can actually download my book below, The Millennial Playbook, Proven Success Strategies for the Millennial Generation, where I actually have an entire chapter dedicated to help you improve your finances. So remember, subscribe below, and I look forward to seeing you guys next time.